The Indian stock market had a really strange week. I mean, on the one hand, it hit record highs. But instead of popping champagne, the mood felt, well, cautious. So, what's really going on? Let's get into it and unpack the forces at play in this market tug of war. So, this is the big puzzle we need to solve. The market is right up there, near its all-time peak. That should be a time for celebration, right? But instead, we're seeing people taking profits and a general feeling of, what's next? What's actually behind this paradox? The best way to picture what's happening is to think of a giant tug of war. On one side, you've got the bulls, just pulling with all their might to take the market to new heights. And on the other, you've got the bears, digging in their heels, trying to pull it back down. Let's meet the teams. So on one side of the rope, we've got the sellers, the foreign institutional investors, or FIIs. These are the big international funds, and you know what? They've been consistently selling off their Indian stocks. But holding the line on the other side are the buyers, the domestic institutional investors, or DIIs. We're talking Indian mutual funds, insurance companies, and they are buying up everything the FIIs are selling and then some. Okay, so let's start with the buyers. Why are the local players so optimistic? What's giving them the confidence to keep pushing the market higher? This is the bull case. The biggest reason for all this optimism comes down to this one number, a shockingly low consumer price inflation of just 0.71% for November. Now, here's why that's so crucial. Low inflation gives the central bank, the RBI, a lot of wiggle room to keep interest rates low. And lower rates, that's just music to the market's ears. It makes it cheaper for companies to borrow and grow, and it makes stocks look way more attractive to investors. And hey, the good news doesn't stop there. We're seeing it pretty much across the board. Wholesale prices also fell, which just confirms that low inflation trend. You can see investor confidence is high too, with small cap stocks, which are a really good measure of how much risk people are willing to take, jumping 1.8%. We're even seeing specific sectors like metals firing on all cylinders, up on signs of better demand from China. The bulls, they've got plenty of fuel for their fire, that's for sure. And this chart right here, it just visualizes the battle perfectly. And this is just from Friday's data. Look at the bar on the right. That's the foreign investors, selling a net of 317 crores. Now, look to the left. That huge green bar, that's our domestic institutions, buying a staggering 1,772 crores. That is the sheer force of domestic money that's holding the line right now. But wait, if things are so good, why are the foreign funds selling? To understand that, we have to flip the coin and look at the other side of the argument. This is the bear case, the warning signs that are making some investors pretty nervous. Before I show you the next number, let's just quickly define what we're looking at. It's called the Index of Industrial Production, or IIP. Think of it like a vital health check for the country's industrial sector. It tracks everything from factory output to mining activity. It's a big deal. And here's the number that's causing some real concern. Industrial production in October grew by just 0.4%. Now, that might not sound terrible on its own, but get this. The month before, it grew by 4.0%. That is a sharp, sudden slowdown. It kind of suggests the industrial engine might be stalling out. And there are other headwinds pushing back too. The rupee has been getting weaker, which makes imports more expensive, and two of the market's biggest engines, the IT and financial sectors, are kind of sputtering. You add all that up, and it helps explain the persistent selling from foreign investors. It's creating a really powerful countercurrent against the bulls. Now, of course, this story doesn't just stop at India's borders. There are all sorts of global winds and wildcards out there that are influencing both sides of this tug of war. If you take a quick look at global commodities, it tells a really interesting story about the global mood. You've got oil prices trending down, which you'd think is great news. But at the very same time, classic safe haven assets like gold and silver are trending up. These opposing signals are creating a very mixed picture for India. And this illustrates the dilemma for India perfectly. On the one hand, yeah, cheaper oil is fantastic news. I mean, as a major importer, it lowers the country's bills and helps keep inflation in check. But then on the other hand, a weaker rupee pushes in the exact opposite direction, making that cheaper oil and all other imports more expensive when you pay for them in local currency. So why are gold and silver prices on the rise? Well, this quote from our source material really sums it up perfectly. When investors get nervous about the global economy, they flock to precious metals as a safe place to park their money. This rally is a flashing sign of wider economic uncertainty. So we have the domestic bulls, powered by low inflation, and they're facing off against these cautious bears who are worried about a slowing industry and global uncertainty. So how did this epic battle end for the week? And more importantly, what happens next? Well, the final result was basically a draw. Can you believe it? After all that pushing and pulling, the two main indices, the Nifty 50 and the Sensex, ended the week almost exactly where they started. The powerful buying from domestic players perfectly canceled out all the selling from foreign funds, which left the market at a complete standstill. So what could possibly break this deadlock? You're going to want to keep your eyes on these three things. First, new PMI data is coming out, and that'll give us a fresh reading on India's manufacturing and service sectors. Second, economic reports out of the US on jobs and inflation will absolutely set the global mood. And third, any action from the RBI on liquidity will directly impact the market right here at home. These are the catalysts that are going to decide next week's winner. And all of this leaves us with a final, and honestly, a fascinating question. For years, the Indian market's direction was so heavily influenced by what foreign investors were doing, but this week showed that domestic money can absolutely stand its ground. So, are we witnessing a fundamental shift? A moment where the Indian market is finally declaring its independence from foreign sentiment? It's a pretty powerful idea to think about.